Welcome back to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson. And today I want to welcome back someone I've had on my show earlier. She's been a crucial role behind the scenes in helping my clients protect what matters most, their homes, their cars, and financial security. She's not only a trusted insurance advisor, but a powerhouse in the ever-changing world of home auto coverage.
Woo!
Laura Sauer.
Hey.
In the insurance shop.
Thanks for having me on again. I'm happy to be here.
Absolutely. And the reason why we are having you back, because it was awesome that I had you come in and talk to all the other loan officers at SWBC and do a presentation. And I was like, that is what we have to talk about, because this is real world stuff. Because Minnesota, what do we call it? Minnesota Wild mortgage or homeowners insurance costs and so forth have just been crazy. The last couple of years. And
everything.
I have to estimate when I'm doing pre-approvals how much homeowner insurance, and it can be wildly off.
I don't envy you on that one. Honestly, sometimes I run a rate and I'm like, I have no idea.
Right. Well, so let's just dive into it. So first and foremost, like kind of what happened. What's happened over obviously inflation plays a role. We've had some crazy storms, lots of them recently. So we've had a lot of carriers drop out. So let's dig into it.
Yeah, it's been a really interesting last 2-3 years in the insurance industry. It started out, I would say, about 2 years ago, actually, was when it really started, when Nationwide decided that they weren't going to write any new personal lines business anymore. So they completely shut down. They didn't leave Minnesota. So if you had a policy with them, you still kept it. But then right after they did that, we were seeing a lot of other carriers starting to pull back, really tighten up underwriting guidelines. So that means they only allowed like the creme de la creme or the best people to come in for new business. But really what they were seeing is that in 2022, pretty much every single home insurance carrier in Minnesota, except for one, lost money. They paid more out in claims than they brought in insurance premiums. And there's a lot of things that went in with that. So that was, kind of coming out of COVID a little bit, but labor costs were through the roof, material costs were through the roof. And then we actually had like 3 catastrophic storms that year. All 3 of those storms were like the biggest hit to Minnesota we've ever had.
So talk about the perfect storm.
Exactly.
Right?
Yep. So obviously, insurance companies, like any other business, they need to make their money, but they're looking at it and they're like, man, if these claims are double, triple, quadruple the price that they were 2 years ago, we need to start doing something different with the premium. So every carrier took a little bit of a different stance to it. The nice thing is that we're a brokerage, so we have access to a lot of different carriers, so we still have options for people. But yeah, there's a lot of carriers that are not writing new business right now. I know 4 carriers for sure actually are leaving Minnesota altogether because they just can't stay solvent. Other carriers just have tight underwriting guidelines, and then other carriers just are allowing pretty much anything. So those are the carriers we like right now.
Yeah, right. We'll take those.
But
let's get policies written.
But yeah, so with that, I mean, insurance, just like anything else, the rates have gone up a lot, which is hard. But when you kind of think about it logically and rationally, it does make a little bit more sense, even though it's no fun to see your prices increase.
Yeah, I mean, I feel like it's settled down at least.
Yeah.
Now it's not like
we're definitely coming out of it.
We used to be able to $100 a month for $250,000 home, no problem, right? Yeah. Nope,
not quite anymore.
Right. But now it's they really get into the roofs. I mean, let's face it. That's where the most of the claims come.
Yep.
Right. And I've had numerous hail claims on my first house. And then of course I had one not too long ago on my house or they came out and looked at it, and they're just drawing little circles. Oh, we got 6 on this side. Yeah.
Yeah.
They've kind of changed that a little bit, haven't they?
Yeah, they're starting to get more picky. So yeah, like you said, roofs are a huge deal. When I talk about carriers that have tightened up their underwriting guidelines. There's a lot of carriers that won't write a new house if the roof is over 10 years old. So with that, when there's a hailstorm, and I'm sure you guys maybe you got a new roof or your neighbors got a new roof or everyone got a new roof. But most people are just waiting for a hailstorm to come through to get it replaced with insurance,
Right.
which is kind of how we've been conditioned to do it. So I don't blame people necessarily.
Right.
I kind of blame our industry. But then also some of the storm chasers that have come through.
I was going to say storm chasers I just know companies that got so big.
Yeah. There were people coming up from Texas.
Right.
That were doing roofs.
Yeah.
So
it was when they have the apps that say, hey, you had 1/4 inch sales hail on this date in your area.
Yeah.
So we want to talk to you, right?
Right.
It's just nonstop.
Which is great to get a new roof because those are really expensive. It's no fun to have to foot that bill as a homeowner. But that's one of the biggest changes that is happening in insurance right now. So I guess I shouldn't be surprised about this because I live insurance every single day. But the biggest thing that I want consumers to know is that their roof isn't going to be insured 100% replacement cost, no matter what age it is. So basically what that means, and it's going to be different for every single carrier. So it's really important for people to understand their policy. But let's say you have a 15-year-old roof. Most carriers in Minnesota, they're not going to give you a new roof if there's hail damage to that roof. They'll pay part of it. And then you as the insured, the homeowner would need to pay your deductible. And then you would also need to pay some out of pocket too.
Right.
So it's kind of like insuring.
Like a depreciation. Right?
Yeah, kind of like a car.
Right.
So like if you're driving a 2015 Toyota, they're not going to buy you a 2025 Toyota. They'll give you the money for a 2015 and then you can foot the bill for a new one.
Now, this is a question you may not know the answer to, but is there options for somebody? Oh, I got a hail damage on my house and my roof is 20 years old. I got hail damage. I have to replace this roof. They're only giving me $8,000. The total is 20. My deductible's $1,000. I need essentially $17,000. Is there options for them to do roofing companies offer financing options? Do you know?
So that's a really good question. Most contractors that I've talked to, they do not. But you can go to a credit union and talk to a personal banker, and they have some. They're credit unions are typically a little bit more
lenient on
and have more options.
Yeah.
Or you can take equity out of your house.
Sure.
I think the biggest thing right now is that every homeowner should just have a savings bucket for home improvements.
Right.
So
kind of like an HOA.
Yeah.
Yourself, right?
Yeah.
Because you got to take care of that maintenance on it.
Yep.
Now, most carriers too are requiring you, or not all, but a lot of them are like, hey, if you're going to get a homeowner's insurance policy, you got to get we want to bundle your autos. How does that work?
So I think that's part of the carriers just trying to recoup all of the money that they lost over those couple years.
Sure.
But instead of just doing a home policy, they want to bundle your home and auto. And part of that is so that, you just have more premium with the company. I would say out of the 30 carriers that we work with, probably 65% of them are requiring that you bundle your home and auto together. So when we're looking at things, we'll look at, if you have your auto with Geico and you're super happy with them, that's great. But it does make sense to look at home and auto quotes together. And then we can also look at just the home, because 9 out of 10 times it's going to be better to have your home and auto bundled. Even though you might be paying a little bit more on your auto, if you move it to a different company, you're paying a lot less in the long run for your home. So Just kind of looking at the whole package.
Nice. What other things do you see industry wide, or I guess what other things do you have? What other advice or tips do you have when shopping?
Yeah.
And so forth.
So you want to talk about HOAs?
Let's talk about HOAs.
All right.
That's a big one.
Yeah.
That's a pain. Condos, I cringe anytime I get we're looking at a condo. I'm like,
they're not easy.
No.
But yeah, so, condos and townhomes, if, you guys don't know, insurance is actually really tricky for those, even though it's not as big of a bill as if it was a single family or duplex policy. But the HOA will cover part of the unit, and then your personal policy, the HO6 policy, is going to cover the other part of the unit. So you have two insurance policies working together to cover your house, basically. So the biggest thing for anybody who has a condo or a townhome, make sure that they understand, or that you understand, what the coverage is that your HOA provides. I look at so many HO6 policies, condo, townhome policies that are incorrect because they just didn't know what the HOA had.
Sure.
Because, there are some times where the personal insurance side is covering way too much of the dwelling when the HOA covers everything, including countertops, cabinets, things like that. So then you don't have to have as much dwelling coverage on your policy.
Sure.
But then I've also seen it on the reverse, where the HOA provides zero coverage. So then you have to cover everything, exterior, interior. So biggest thing, know what the HOA is going to provide.
Yeah, or get a copy of the policy and send it to you.
Yes.
Right?
Yep.
So you
Yep.
get adequate coverage for it.
Yep. So that gets confusing. And then the other part of it is you need to have loss assessment coverage. So what a lot of people don't know is that even though an HOA, the master policy, is covering, let's say, the exterior of the house, they're like, oh, that's perfect. That's covered by the HOA. Well, if a hailstorm comes through and insurance from the master policy replaces the roof and siding, it's up to the unit owner to come up with the deductible for that master policy. And master policy deductibles are huge.
Right. I mean, we're seeing 25,000 for like water and hail.
Yeah.
Or
I've seen 50 to 100,000.
Oh my God.
Yeah.
So what does a homeowner do when also they have this huge claim?
Well,
It's $25,000 or $50,000 or $100,000 even.
If you have loss assessment coverage on your policy, you just file a claim for it and you're good to go. That's why loss assessment is super important. But it's also really tricky because there are some carriers that limit that coverage.
That can be, yeah.
Yep.
So on the mortgage world, this is why I hate it the most, because I ran into it a year ago, and now it sucks because my client thought we were the bad people, and it was like, because we were almost clear to close, and we were waiting for this master policy to come through. And we finally get this. I mean, it was an easy transaction. Master policy comes in. It's a condo, apartment style condo, not like townhome style condo, but and $25,000 for each occurrence for wind, hail, ice, whatever.
Yeah.
And that's not eligible to be financed with the traditional mortgage. Freddie.
Yeah.
FHA doesn't care about that. Where you get the loss assessment to cover it. Fannie was allowing it, and through February 8th they made a decision, and then they gave it a grace period of like 2 months, so like May. So literally like today, I think it was like May 8th. Today's what, the 7th?
Oh my gosh, I don't even know. It is the 7th. Yeah,
yes,
good job.
Yes. We're closing at the end of May. And I'm calling other condos that just closed, and like, yeah, we were able to do it, no problem. We could not get it done, and I felt so bad, and like, well, we had to cancel, and and it had to go non-warrantable condo. Purchase price, there's a minimum loan amounts on that, $125,000, where purchase price was $120,000.
Oh my gosh!
So there's just nothing we could do,
Mm-hmm.
and it just sucked. And then on top of it, FHA allows for it. So I was like, oh, we'll switch to FHA. Well, now you got to get the rules and regulations. And the rules and regulations of that HOA was that if you rent out the property, you can't discriminate. And the eyes of discrimination is literally just asking them for credit and stuff like that.
No way. That's discrimination?
Making sure they have acceptable credit, or I think it was more on the lines of like criminal histories and stuff like that.
I would call that due diligence.
Yeah, right.
But okay.
FHA, but so then you can't discriminate with FHA. So
Wow.
we couldn't do it that way.
Shoot.
Right. Right. So long story short, that's why I hate when I see a condo come in and I'm like, oh my God, what kind of, because that's usually something like that is now the kicker on it. So there's plenty of buildings that are like, well, the only thing you can do is cash or non-warrantable condo, 20% down. Can't buy a traditional mortgage.
Yeah, I wonder when that's going to change because that's a huge deal.
So FHFA, Federal Housing Finance Agency, different than Federal Housing Agency, FHFA.
Oh my gosh, I might need diagrams. Okay.
Yes. Anyway, they kind of govern Fannie Freddie. Well, the new administration is separating a lot of that stuff out. And now they are making rules for these assessments. But they're also, I think they're trying to bend the insurance carriers a little bit on not having those giant deductibles.
Yeah.
But then the alternative is now you have bigger HOAs, you know.
Well, and then the premium for your personal policy is a lot more expensive. But that's the thing is that the personal HO6 policy was never designed to pay the deductible of a master association. Like this is just something that nobody, when they wrote these policies 20 years ago, were thinking about because the deductibles were cheap. And they're like, oh, this is like never going to happen. And then all of a sudden,
now it happens.
All of a sudden it's here. Exactly. Yep.
Right. But one of the biggest problems, we had was the condo, in the condo world for mortgage, was when the maintenance of that building in Florida, that high rise that collapsed.
Oh.
That's what changed the world on our side.
Okay.
Because after that, they had these addendums like, hey, when's the last time you had a structural maintenance done? Or like surveys or like,
Makes sense.
But it was such a struggle because we have these questionnaires we have to send to the HOA or the property management, and they have to fill them out. Well, they would see these questions like, well, we don't want to respond to that because we don't want no liability.
Right.
Like, we just need you to check the boxes off. Like, we don't care. There's no liability. We just need to know.
Right.
If there's one done, we need a copy of it. So we know that it's a structural sound building. And it took like, I think 6 to 9 months really before most HOAs just was like finally doing it.
Yeah.
Because they just get pounded on. Like we can't close on this house and this person can't sell.
Right. Would you like to turn over some of these units or
right. So you want to own them? Okay. So it was just a challenge. And so
change is just always hard. Yeah. And I'm sure, I probably would have been nervous being like, oh.
Yeah, I just had one not too long ago. They're like, no, we're not filling it out. So there's alternative ways that we have to get new this or that. And like we have to get meeting minutes for the last like 6 months. So then because in the meeting minutes, if they're talking about, oh, we got to do this maintenance or this, and then it can be the kicker.
Okay.
like, oh, we got this, this happening. So that's the alternative route. So
look at how creative you can get. I love that.
Right. So it's we have to figure out how to get these houses. And that's why like condo market right now isn't selling very well, because of a lot of the changes that's happened. Mm-hmm. And then, I used to see, $180 for HOA. Right?
Yeah.
That's very rare.
No.
I don't think you even see that anymore.
Typically on the cheap, it's going to be like $500 for the year. Like sometimes $350 depending on your score. But
I was just talking about the HOA monthly payment.
Oh, the assessments. Yes. Yeah.
But
okay.
Yeah, I do see more condo policy costs have come down because they were pushing like $1,000 for a minute.
There's still a lot of carriers that are up there.
Yeah.
So yeah.
Everything.
From the
annual policy, everybody annual.
Annual, yes, not monthly. But everything is just super cyclical, right? Like sometimes a carrier is hot in one thing, and then sometimes they're not. But
yeah. And you've even said it that certain carriers are like, oh, they've kind of relaxed some of these things because they're not hopefully we don't have a big storm season this year. And,
Right.
you know,
It was nice those tornadoes didn't come through.
yeah, it was very nice, right?
For lots of reasons.
Talk about like how they get the recently every time, oh, we're gonna have a snowstorm, whether it's 4 inches or 20 inches. It's like, oh my God, it's gonna be the end of the world.
Gotta love Minnesota.
Yeah.
Oh my gosh.
That tornado like that for the two days prior to this that day was kind of funny. It's like, oh, it's gonna be so bad. Like,
yeah.
Like button down the hatch is like, is this a hurricane? Like,
people were talking about tornado boxes. I'm like, what's a tornado box? Do I need one?
Right. I'm gonna go get some cement and make some make my own little cellar.
Oh, it was so funny. But no, luckily crisis averted. We're all good there.
Right.
But
right.
yeah.
Well, let's pray that we can avoid those. What else do you have for anyone?
Yeah. So another thing is that people don't really understand is that like policies are they're all different. So, and declarations pages can be a little bit tricky to read sometimes. But one thing that I mentioned in the meeting with you guys that not a lot of people know of is that Progressive, they have 2 different underwriting companies, which means that they have 2 different policies. So if I were to call Progressive on the phone and get an HO6 policy or an HO3, so single family home covers the whole house, I'm going to get a quote from Progressive that's going to say Progressive quote, but then there's going to be a little company underneath it called Homesite. And Homesite is one step above your state insurance. So it's got a lot of gaps in coverage. It's not a very good policy. Sometimes the rate isn't even as good as you can get with a standard carrier, but I would never recommend anybody to go there. So my number one, do not buy your home insurance online or like just calling a company directly. Always go through an agent.
Yeah, I mean, I would have to assume that's because it's online shopping and people just look at a number.
Yep.
And that's it, right?
Mm-hmm.
So when you brought that up, I know my assistant, she sees it all the time when we get it. She's like, oh, this is the home site one.
Yeah.
She's got to talk to Laura.
Well, and I think the reason why people are doing that is just because they're not educated in what to do. And I mean, a lot of people got their car insurance with Progressive.
How would you, I mean, as a, how many times I've had to renew my insurance, like put insurance on a house, like, I don't know.
Yeah.
It's not I don't do this every day.
Right.
So that's why they call you.
Right. Well, and then we also have a contract with Progressive, so you can get it through our brokerage. But then when you get our policy, it's going to say Progressive, but then underneath it's going to say American Strategic. And that is a standard carrier. Yeah. And I would say they're actually a really good carrier. I like them a lot. So
good.
Yeah.
Good.
So I think that's really interesting. The other one I see a lot is Costco. So Costco has an American family policy, but underneath it, you're still going to see that home site. So it's not going to be the same.
Underwriting all these or insuring all these properties, but under the carrier's name.
Yes.
Right?
Yep. So it's like the underwriting company, but it's branded by American Family. So it's not the same policy that you can get from an American Family agent.
Sure.
So yeah, so it's just little things like that are kind of interesting.
Awesome. What else? Well, all I know, here's what I want to tell my followers and everybody out there and why I love using the insurance shop. You guys have, number one, people can call you, right?
Yeah, we answer our phones.
Yes. Yes. I mean, that's kind of the biggest thing, specifically when it comes to insurance. I know some of my past clients with, other agencies are like, I can't get a hold of anybody there. I leave a message. I may get an email back. I'm frustrated. Like, I'm trying to file a claim. What do I do?
Mm-hmm.
Right? And being insurance world, kind of like mortgage, I mean, if you don't do this every day, how do you know everything?
Right.
And how do you know these answers, or what's the best thing to do? And that's why I rely on you. Like, hey, what do I need to do? Like, what do you think? So when you or Lacey and you come back with these emails to the, I think I do have to do the analytics on this, but I think you guys get like over half of my clients. So, it's awesome.
Yeah.
So,
thank you so much.
Yeah, no problem. And just how when you come back with like I've reviewed their policy. Here's what we got. You have it really dialed in to like what the specifics are and why, what things are. So I love that. So I love your communication, customer service, and then obviously your rates. I mean, like, you get chopped all the time, right?
Mhm.
So you guys have great rates as well. So I enjoy working with you very much so. And I hope everybody out there has same if you need insurance, you need a quote, your policy is coming due, please connect with Laura.
Yeah.
I'll have all of your information as usual when we post it online and put it in the shorts below, but please reach out to Laura if you have any questions. If you want to talk to me about anything that I can connect you as well, we can do that, but please like and subscribe. Laura, thank you again for coming on the show again. Your knowledge is awesome in this business, in this realm. So I appreciate it very much.
Absolutely. Thanks.
Yep.